Okwemi Oguntade, Senior Investment Officer with Financial Derivatives, joins me now as we continue our focus on the commodities market. So good morning to you, Okwemi. Thank you for coming in.
Good morning, Harriet.
So when we had conversations on Thursday, literally my fingers are locked, on the oil market, but we've seen steady upward progression in oil prices. And just like Dolapo said, it may be too early for us to cry uhuru, or do you think so?
Well, yeah, I mean, having oil prices at $40, it's good news for Nigeria. But then if you're looking at, in terms of revenue, if you're looking at Nigeria's production level, production is still below target. I mean, oil prices right now are above the budget benchmark of $38. But if you're looking at our production levels, it's still at 1.9 million barrels per day as opposed to 2.2 million barrels per day. So this suggests that we'll still have a revenue shortfall in terms of our budget target for revenue. So in that sense, it's good news, but until when something is done about our production levels, we can't really jump up and say we've crossed that bridge.
So we're just going to have to wait for, Moody has placed Nigeria on review for downgrades, just like Bolaji already mentioned. But enough of the oil matters. Let's come to agri-commodities now. We've also seen a kind of sharp upward and downward movement for some of those commodities that we track here, including wheat, corn, and sugar.
Yes, we've seen specifically the only commodity that came down this week in the Agric on the Agric side is sugar prices, and this is because of better weather conditions in Brazil. But looking at wheat, corn, and sugar and cocoa, prices have increased, and specifically for corn, the reason why prices are going up is because higher oil prices makes refineries make use of ethanol, a corn-based biofuel. They mix it up with the gasoline, and that's the reason why we're seeing an increase in demand for corn futures. And then for wheat, what we're seeing in wheat is that we've had the dollar weakened against the 6 baskets of currencies last week, and this contributed to an increase in demand for U.S. grains in the market. While cocoa, the news is still the same. We have bad weather conditions in West Africa, the top grain regions for cocoa.
Still battling an El Nino. Yeah. But taking a look at the domestic commodity prices, we still see that the 50 kilogram of rice is still pretty high, 13,500 naira. Here in Lagos, in Kano, it's 13,500 as well, but in Onisha, it's 14,000 naira. One would have expected that post the celebrations and the rest of it, that maybe we would see, a drop in the prices. Or is it because Easter is coming that we're seeing these prices rising again?
Well, we have the upcoming celebration being Easter, and then if you're looking at what's happening in the market as well, our inflation rates are still pretty high at 9.6, and it's almost like we expect that inflation would reach double digit this year. The last time we had double digits in inflation was in 2012, where we had 11.9%, and the following month in January it dropped down to 9% inflation rate, and this was because the reason why we got that high was because of the festive seasons. But in this period, there are completely different factors driving inflation. We have the foreign exchange issue. We also have fuel scarcity that is gradually fizzling out now when you look at the queues at the filling station. And then you also have the fact that it's becoming difficult to gain access to Forex, to even import these commodities that have imported content. So all this put together are contributing to price increase. And we know Nigeria imports rice. So in that sense, we still expect domestic commodity prices to go up. But the demand pressure coming from Easter might not be as high as we would expect during festive seasons, because what we know is that disposable incomes right now are significantly less than what they were, and so in that sense we shouldn't expect the demand pressure to be that high.
Yeah, we also, if you listen to the start of the program, we saw that the CBN PMI report shows that there was a drop from 47.2 in January to 45.5 because of the slowdown in production activities as well as consumer confidence.
Yeah, we are also having a slowdown in consumer confidence, like you rightly mentioned. And if you're looking at the non-manufacturing PMI as well, there was a contraction month on month. And this is because of the lower disposable incomes that we have in the consumers cannot continue increasing. There has to be some form of prioritization of what to consume and what not to consume, because if your disposable income are not able to take care of your usual consumption pattern, then you need to adjust your consumption pattern, and that's why we're seeing a contraction in our
yeah, but then taking a look at some of those the FMCG companies that you have here on your list, Nestle, Guinness, Honeywell, Flour Mills Nigeria, Cadbury Nigeria, Nigeria Breweries, and Dangote Sugar, it seems as if stock prices have been commodity news insensitive. Could you expatiate on that?
Well, yes, they're commodity news insensitive in the sense that what factors are driving stock prices right now in the market are usually either the corporate results or whatever news is breaking headlines in the market, not necessarily what is going on in the commodities market. Although there is some indirect link between what happens with commodities and the price of stock, but the period, the lag points between when we have that effect on commodities usually has an effect on their profit levels, and it's profit levels that feeds into our corporate results, and that's when we see an impact on our stock prices.
For last week, it was almost as if we had a Dangote rally.
Yes.
You know, the Dangote cement result that came out was quite impressive. Investors were they went in a frenzy, and so we saw the positive rally that were recorded on the market. Ditto for Dangote Sugar, and according to your list, we saw a 3.83%. We've seen a 3.83% increase week on week on that particular equity. The share price is at 5 naira. Yes. 70 kobo, but on year to date is down about 5.50%. What I'm particular about is Nigerian breweries. That is one particular equity that's looking at it now is at 98 naira. That stock has actually really lost because investors have continuously shaved off that particular equity.
Yes, what we have in the markets, that what we know is from the beginning of the year, we've had some macroeconomic headwinds that have significantly affected the performance in the stock market. And for this reason, that's why you see an equity like Nigerian breweries as well as Nestle coming down significantly to 98 and 715 naira as their stock prices. So we have our macroeconomic headwinds that are also playing into the stock market, and that's why we have lower prices.
Oh, well, thank you so much, Okwemi. I'm sure the next time I have you here in the studio, we'll be taking a look at developments again in the oil commodities market. I wonder what's going to happen between now and then, since we're seeing a steady rise in oil prices. Do you think it will be sustained till the end of the week?
Well, that's the thing with oil prices. Oil prices are unpredictable. It could be up today, it could be down tomorrow, but we hope that this increase in prices will be sustainable, because that's good news for Nigeria, and for Nigeria we want it to be good and not bad. So.
Okay, so I'm hoping that since today is International Women's Day, strong women like you might determine how the prices will go tomorrow. But thank you so much, Okwemi, for coming on the show today.
Thank you for having me.
And of course, we're going to have you back here again on Thursday as we take a look at what's going on in the commodities market. Well, Business Morning continues in just a moment. Join us again.